that you know that we are thinking about you every day and are trying to establish resources that are valuable for you as you navigate this situation. Tonight, our town hall will be focused on insurance. We work directly with local agencies, including Boulder County Housing and Human Services, Boulder County Community Services, as well as our municipalities when we prepare for these town halls. And clearly, all of our constituents, all of our partners shared that this subject is pretty acute right now in terms of lots of questions still navigating the waters. So we are thrilled tonight to have two expert panelists with us. We have Bobbi Baca with us from the Colorado Division of Insurance, as well as Amy Bach, who is the Executive Director of United Policyholders. And Amy, this is really great. We were referred to United Policyholders by our friends at Boulder County, and they're an advocacy organization providing very specific advocacy around insurance matters for folks in Colorado and California. So we're thrilled to have you as well. And of course, Bobbi, the Division of Insurance is where the buck stops. I'm pretty sure of that. So we really appreciate you ladies on board this evening. And as always, we have Elizabeth Million with us. Elizabeth is our Senior Vice President of Mortgages. And with her tonight is our other stalwart on these town halls, Todd Peyok, with our commercial lending group. Both of these individuals are experts in the field, and they have literally, since the onset, since the fires, they've literally met one-on-one with the majority of our members that were affected by the Marshall Fire, which that number is significant, well over 500. So that said, I will be sharing this screen with you this evening periodically. These are resources for Elevations members and actually the community. So we certainly we would ask you, even if you're not an Elevations member, to come and spend some time with our resources in hopes that we can help as well. Colorado DORA, our Department of Regulatory Affairs Division of Insurance, their contact information is here as well. And of course, all of you are very aware of Boulder County Office of Emergency Management. They've really been the focal point for distributing of information and a resource. So I'll bring this slide up as the evening goes on. We also have some amazing resources from both the division as well as Amy and United Policyholders. I was just amazed to see the resources UPH provides to us. Just a quick logistics notes for those of you that are new to our town halls. We will use the chat function, so we don't have any audio this evening, but we would encourage you to place your questions and comments in the chat, and we'll make sure the appropriate panelist will get the question. So I am just seeing right now, so we can go ahead and get underway and with your. So we'll give our attendees an opportunity to get your questions in the chat. And right now my chat is I'm seeing if I can get if I have any questions yet or not.
It looks like you've got one in Q&A.
Okay, let's have a look at that one. So yeah, again, leverage the chat functionality if you would tonight. Although here's a great question, and of course, this is a very typical question that Amy, you and Bobbi likely see. When I have received the check from the insurance company, when should I take it to my financial institution?
How do you want us to?
I'm sorry. So you are, so I would ask each of you to take the questions as you think is appropriate, but we'll likely have you both weighing in on some of these questions. So Amy, start us off. My apologies.
Okay, thank you. So yeah, so the checks that you get from your insurance company, if they relate to your, we talk about buckets of coverage, right? Your dwelling bucket, contents bucket, other structures bucket, debris removal bucket, temporary rent bucket. The checks that come in for your dwelling and your other structures, your garages, outbuildings, walkways, barns, sheds, those will have your lender's name on them. And as soon as you get them, since you want to deposit them, you would take it right to your lender and work with them. Generally speaking, most people will want to open either a special account, so they can that's one thing we recommend, is that you have an account that's separate from your regular account, so you can keep track of the insurance payments that come in and then disbursements. But I think some of the bank folks might have some good tips there. But the lender's name should not be on your contents bucket checks or your temporary rent checks, etc. Just for the structure.
And I don't have anything to add. Amy is spot on, and I think that with the again, depending on the lender, the lender may take that money and hold it in their own account and then disperse as construction begins and after they've inspected and done what they need to do.
Thank you. That's great. Liz, I just want to verify something while we have this question in front of us. So my understanding is our branch managers can endorse insurance checks up to $40,000. Is that correct, or is that?
You're somewhat correct, Dennis. So it depends on just what Amy was saying. If it's for the dwelling and the claim is actually less than $40,000, then they can sign the check. If the insurance claim is above $40,000, then actually we need to process that check through our subservicer DMI.
Okay, I just wanted to be clear on that, because we want to make sure our members don't have to, as appropriate, we don't want them jumping through hoops or anything like that.
And we do have some members coming into branches for contents coverage and thinking that we have to endorse those. And of course, as Amy just mentioned, that's not something we have to sign. On occasion, I will tell Amy and Bobbi, we have seen where the insurance is adding our name to contents checks. But we've trained the branch staff to actually look at the insurance claim from the adjuster and determine if that check is for contents or for dwelling.
Yeah, and if you do get a check that shouldn't have a lender's name on it but does, you can just ask the insurer to reissue it.
Yeah.
And I assume, Dennis, that you, I know you guys are really hands-on with your members, that you've already talked a bit about options for forbearance, or for, if people need counseling on their existing mortgage, you offer that, right?
Yeah, I'll speak to that if that's okay, Dennis. Yes, that's a great question, Amy. We immediately offered the forbearance to any of our members who needed it. Some did take us up on that, of course, which makes sense. So yes, that's something that we offer to them right away.
Just thank you for that. Just a quick follow-up on that. With dwelling coverage from insurance, should we expect it to be sent to elevations / the lender? How would you pay this out? So the question, I think, has a lot to do with, where is that check going? Does it normally go to the policyholder, or does it normally go to the lender, or is there a standardized process for that?
So normally it would go to the policyholder first with both the policyholder and the lender's name on the check. And then it would be up to the policyholder to get it to their lender.
Okay. Okay. And then what would you typically see in terms of, so then they can use their discretion on how they use the proceeds of that claim check? Is that, can I say that? That's a kind of a sweeping term.
Well, you can. I think it really, it does vary, right? Depending on, of course, the outstanding loan balance. If the check is for more than that, then you work with the borrower, right? But I think, in general, most people will want to work with you to, some people, of course, just want to, they're just so overwhelmed and they feel so broke that they're like, well, this is a lot of money. I need it. Can I just use it for whatever? But as Bobbi, knows, and we can explain further, in order to get the full amount that people are owed for their dwelling, they do need to make a plan for replacing the dwelling. So there is some work that has to go, has to get done in terms of what happens to the check after it gets endorsed.
Yeah, very good. I think, Todd, you have you've built a calculator that assists members in making consumers in making decisions on how best to move forward.
Yeah, Dennis, we have, because of this question, that's more of a mathematical calculation than anything, based on my insurance proceeds, based on what the costs are going to be to rebuild, other things that we're trying to help the member make a kind of a more educated decision on whether to keep the mortgage in place and make payments on that, or just pay off the mortgage and then proceed with construction to rebuild.
Very good. Yeah, that's been a great resource, Todd. I know you've utilized that quite a bit. I need to stand corrected here. So the chat is not the vehicle to get your questions to us. The vehicle is Q&A. That makes sense to put questions in the question and answer session. So my apologies for that to our attendees. Chat has indeed been disabled. I'm not sure what transpired there on my end, but please use the Q&A. Great question, although interesting. Why is my claim taking so long to process? Is there could a consumer expect a typical timeline, or does it vary greatly? This individual's claim is taking obviously a significant amount of time. What's appropriate? What seems appropriate?
Yeah, so that's something that we work with. Those are questions we answer all the time. And so the company does have, it is going to take some time to, come up with that estimate, and the estimates are extremely detailed, right? So as long as the claim is moving forward, the adjuster has met with the policyholder and they've gone through, what does the house look like? What is the square footage? What rooms were there? What was in, what types of construction was it? Those types of things. And then the company, the adjuster, should be working on getting that estimate out. I would say by now, we are almost 3 months out from the fire. I would say by now, the policyholder should have received at the very least the first estimate. And if they haven't, then they need to contact their adjuster and find out what's going on, stay on top of that, and then they can contact our office if they're not getting any results.
Amy, what's your sense on what might complicate a claims timeline, or what can the consumer do to help expedite that?
Yeah, that's a great question. And there are of course specific timelines that insurers have to comply with, but as Bobbi said, it's in a situation like this where adjusters are handling large numbers of claims, and the way that adjusters do estimates today, most of them are using a software program, Xactware. So it's not like they have to like go out and find a contractor to, do an estimate. They can generate them fairly quickly. And as Bobbi said, I think by now, most people should have gotten at least a rough dwelling replacement cost estimate. They also should have gotten 30% of their contents coverage, as that is Colorado law, without having to do an inventory. So, the law doesn't have a specific time on that, but again, it's reasonableness, right? So I think, in answer to your question, Dennis, I think from the survivor's perspective or the impacted homeowner, it does feel like what's taking so long pretty often. But the process is much more time consuming than anyone would like it to be. We would certainly like it to be simpler. It'd be great. There's something called a valued policy where basically the insurer just pays out the face amount of the policy, but those don't really exist. You don't see those very often. So in this case, the insurers have built in all kinds of processes, and it does make things sometimes take longer than people would like it to.
Well, very good. Thank you, ladies, for that. Certainly, if you're feeling as a consumer that it's being drug out or something like that, that's precisely what the division would probably like to hear about. So good luck on that front. It does seem like the time stands still in situations like this, but hopefully the insurance companies are able to expedite this. Question in reference to SBA disaster loans. Todd, this might be your wheelhouse. Is Elevations able to work with the SBA disaster loans? And if so, can I use that loan to pay off my mortgage?
Not sure yet. I've met with a handful of people regarding this disaster recovery loan, and I'm not sure I'm waiting to see the paperwork. Several people have been approved for it. They're getting documents and stuff like that, but I'm uncertain right now of what the requirements are. And part of it is what is this loan going to be secured by? Is it going to be a lien against your house? And then secondly, will that lien be subordinated? Will it allow you to reconstruct if you'd like to move forward or not? So, if anybody's out there's got the documents and they're happy to share it with me, I'd love to review them just to kind of get a better handle, because I do get asked this question quite a bit.
Amy or Bobbi, do you have any insights into the SBA disaster loans, or is that not necessarily your wheelhouse?
That is not my wheelhouse. I can see if I can get you a contact with the SBA and see if maybe somebody can, if you can contact that person. I know I spoke to somebody when we were at the Disaster Assistance Center, but I don't have that information at my fingertips, so I can send that to you
That'd be
tomorrow.
great.
I can share 2 data points on SBA loans. One is that that the max you can get is $250,000. But the other one is kind of probably the more important one right now, which is what we have heard over and over and over after the last few disasters, is that when you apply, you're almost 90% gonna get rejected. And then especially if you put down that you have insurance, and then you have to reapply. So it's like, if at first you don't succeed, try again. That's the data point for applying for an SBA loan. But I do think, certainly if Bobbi's got a connection to help your members there, it would be great. But I've heard this from so many people that I know it's true, that, just because the pace of disasters has sped up a bit, and I think they're getting a lot of applications.
Yeah, that's interesting. Certainly, as far as those of you on the call, our attendees, we'll try to glean some insights into this. Thank you, Amy. Another question for Todd, it seems like. Question in reference to processes for draws on construction loans. I've heard there are two methods, one using a mortgage and the other using a construction draw. So Todd, just briefly, and I know this is a significant process. Member comes to us to rebuild. How does so we do a construction loan and then obviously to permanent financing. How are those draws handled?
Yeah, most members that we're talking to are looking to rebuild and they're looking for a construction loan. They are still trying to figure out how that ties into their existing mortgage, insurance proceeds, and everything like that. Typically, our draw process, and what we mean by a draw process is we set up a loan. As you incur the costs associated with the rebuilding, we draw the money off the loan, put it into a controlled disbursement account so you can pay your general contractor, subcontractors, whatever. So we typically do draws once a month. And it's usually based on items that have been incurred, costs that have been incurred. Today's market, you're going to have to do draws for deposits, and sometimes because of the lead time associated with various items such as windows, appliances, stuff like that, that you may have to do a draw before you actually have those items on site. But typically it's a monthly draw would be the preference. And most builders, I think, are kind of accustomed to that, but there can be exceptions. All the time somebody will have to say, hey, you know I did a draw already for this month, but now I found a great deal on appliances. I need to draw that to go ahead and get those ordered and stuff. So
perfect. That's great. I know we are and will be doing a significant number of construction loans. You and your team have very well established processes. So thank you for that. I do have an insurance question coming up, but right before that, let me just get to our next question. The question is, can you talk a bit more about how forbearance usually works? That's going to be a Elizabeth question. Although, listen, you ladies on the insurance side, if you have insight,
maybe Bobbi and Amy,
these
do you have any
questions,
comments
please
on the
jump in.
forbearance?
Only that paying off your mortgage before you have a plan to replace your home can really get you in a stuck. And so if you are under financial stress, forbearance might be a good way to contend with the situation without having to put all your insurance funds, lock them up. That's all.
Okay. Thank you, Amy, for that. So yeah, I mean, what we are offering right now is, if you are in need of a forbearance here at Elevations, we'll automatically put you into a 90-day forbearance. And then after that, you would want to contact us and we'd walk you through the process about what the next steps would be. Typically a forbearance lasts for a year if you'd like forbearance for a year. But I do have to tell you that at some point in time when the forbearance comes to an end, you have to figure out what the next steps are. And, we would be, of course, able to put the balance on what we call the back of the loan, like a deferral, but you would have to sign some document, some paperwork and agree to it. So if you're interested in a forbearance, definitely reach out to us and we can certainly walk you through that process.
That occurs to me, both your comments, Amy and Elizabeth, sequencing is clearly critical. So you don't want to jump a step or miss a step. It could be costly on any number of fronts, from timing or to even financials. So I know, Elizabeth, the forbearance program that we deployed has been a lifesaver for some, and for some that hasn't been something that's come up. But I'm glad we have that program, and I think our membership appreciates it. Amy, can you give us, or Bobbi, give us a sense what, and I don't want to get, I want to make sure, most of our attendees are already well into this. Is there an optimal sequence for this in the wake of something like this for a household? Is that a question that's appropriate to ask?
I think it's a great question, and I'm sure Bobbi has a lot to say about it. But since I opened my mouth first, I guess I'll just give a brief answer. A lot of what our organization has, a lot of our messaging, we've been giving guidance to wildfire impacted households now for 30 plus years. is that we know that, you know, you feel a lot of pressure. There's pressure coming from a lot of different places. And even your own, you know, fire impacted neighbors can kind of get you stressed out thinking that, oh, they're ahead and is this a race? And, you know, so one of the messages we really try to say over and over is it's this is a process, and the way to get through it is one step at a time. And Dennis, you hit the nail on the head about, like, you know, not jumping, you know, ahead and then limiting your options, right? Because I think for most people, you know, the most important thing is getting situated in temporary housing so that you can start getting on a regular sleep schedule again. And, you know, if you have kids, they can get back into their routine, because most people in this situation are so disoriented that it's very hard to make good financial decisions right away, right? You're grieving. It's you know, it's losing a home is, or even just being displaced. It's a lot of people liken it to losing a loved one. You know, it's a very emotional experience, and sometimes you don't make the best decisions when you're feeling emotional. So I think even though insurance policies have deadlines, although Bobbi's agency has been really great from day one at just having, you know, being very strong but respectful to insurance companies, that they've got to work as collaboratively as they can with their customers and give them extensions when needed. So with all that said, you know, yeah, you got to start getting your mind around valuing what you lost. You know, that you just can't get around, right? You got to figure out those valuations of your home, what it's going to cost to put it back to current, you know, building codes, and then what your stuff, you know, that you lost, your contents. So you got to kind of, you know, it's good to get started with those things, but also just be very, very kind to yourself and understand that, you know, this is going to take some time, and you just have to kind of buckle up and try to stay as healthy as you can.
Love that. That's key. Bobbi.
Yeah, I was just gonna, I mean, Amy said it perfectly, and I would just reiterate that there are certain deadlines out there, but some of them are, you know, not immediate, like your content. So you're completing an inventory, you have a year to complete that inventory from the date of loss. So, you know, take time with it. It's a very emotional and traumatic experience to fill out that inventory. One of the things the commissioner did ask of the insurance companies was to bump up that 30% to 60% without an inventory. And we sent the request to, I believe, 65 companies, and most of them agreed to 60%. Some of them were already doing 75%. And then there were a handful that agreed to 50%, but everybody did agree, every company agreed to go more than 30% without completing that inventory. So like Amy said, be kind to yourself, give yourself some time, particularly with that, but make sure the claim process continues to move forward. They do need to continue to work with their company and begin that, you know, hire that contractor, begin that next phase of rebuilding.
Perfect. Very thoughtful comments, thoughtful insights. Thank you very much for that. Can Bobbi or Amy comment on ALE extension mandates? I've heard rumblings that the state is pressuring insurance companies to extend ALE to 24 months across the board. Is that accurate?
Not completely, but
okay. First, tell us what ALE is.
Right. So additional living expense coverage, or loss of use, as sometimes it's referred to, loss of use in the policy. The statute requires that every homeowner policy include 12 months of ALE, and then most companies, a lot of companies out there actually include 24 months. What we are asking the companies to do is to consider any extenuating circumstances with regard to the time limits, things that prevent the claim from moving forward, things that prevent the rebuilding from moving forward. For instance, the debris removal program. That's something that may be outside of the policyholders' ability to move forward. And so what we would recommend policyholders do is that as you are getting closer to those time limits, so if you have a 12-month limit, at probably about the 8 or 9 month mark, start reaching out to the insurance company and having the conversations with them.
Very good.
If you're in the 24, you have a 24-month policy, and at 20 months, it looks like you have, another year to go to rebuild. At that point, start reaching out to the company and making the request for an extension of time. So we do have an emergency regulation out there, which actually applies to both the East Troublesome Fire and the Marshall Fire survivors that talks about this extending time limits, which we will also be putting into a permanent regulation at some point. So we're not requiring 24 months, but we are requesting that they provide extended time. So a 12-month may turn into 18 months or more, but we can't put a specific time limit on that.
Yeah, Amy.
Yeah, I would just add that, after a series of previous wildfires, the Colorado legislature passed an insurance reform bill in 2013 to try to make people's lives a little easier with the insurance process after a wildfire. And one of the things that they did was they required insurers to offer at the point of sale, when they sell the policy, 24 months of this temporary living expense coverage. It's got lots of different labels, as you heard Bobbi say: ALE, loss of use, temporary rent. Anyway, it's all the same thing. It's the expenses that you're incurring because you lost the use of your home. So the law that got passed in 2013 said that when you buy your policy, that the salesperson was supposed to offer you the 24 months of loss of use, ALE, and also a 20% extension of your dwelling coverage. And I think, we're hearing mixed stories. We're hearing some people who have the 24, some people who don't, but more that have it that don't. But I think I just have a hunch that the insurers will, I hope that they'll be flexible about extending people who only have 12. I mean, we've got COVID, we've got, supply chain issues, we've got, shortages of contractors. So, one of the most important things you can do is keep that paper trail that you're cooperating with your insurance company and that you're doing your best, which is really all anyone would expect you to do. Is, if you're, that you're following leads to figure things out. And as far as what's going to happen when we hit 24 months and people are not rebuilt, I think there's going to be a lot of pressure put on insurers, and I'm sure that Bobbi's agency is going to be part of that because, again, these are just not normal times. But insurance companies do have they will point to the fact that it's a contract and all that. So, I think, look, we all know 12 months is really not enough after disasters.
Yeah.
And I think the insurers recognize that. I'm not sure quite why they would continue to sell the 12-month, but that's actually how it always used to be. It's kind of the new normal.
Well, very good.
Yeah.
Thank you, Amy and Bobbi, for that. Question, do rebuilding cost estimates based on square footage include basement square footage? For instance, how does an estimate based on 2,000 square feet of above ground living space consider an additional 1,000 square feet in the basement? So do we see is there a demarcation line between living above ground and the basement?
It literally just should be a builder understands it, what it costs per square foot for an unfinished space is X, and the per square foot for a finished space should be Y. So any estimate to replace a home should be complete. And so, you know, yeah, it doesn't cost as much to put an unfinished basement, but it still costs something. So the estimate should include both at different price points.
Bobby, does that?
I agree. Yeah.
Okay. That's a great question, because in a lot of respects, Todd, basements are treated differently as far as total square footage. Any insights on that from you or Liz?
Yeah, I think most builders, when they're quoting you $1 per square foot, they're probably looking at finished square footage, because, you know, that's where the most expense is. And then if you want to finish your basement, they'll add on to that. So
Well,
most of the time.
let me ask you this. What if your basement was finished prior to the incident? So you're going to want to rebuild the home, the same home for all the same attributes of the home for all practical purposes. How does a contractor, obviously they take that into account?
Yes, they do. Unfortunately, though, I mean, it still takes lumber, drywall, electrical, and all those factors into it. So where it used to be, you know, to finish out a basement was relatively inexpensive because you already had the concrete walls and stuff, but just because of material costs increasing the way they have, it's getting a lot more expensive to complete a basement. We do have as attendees, and I'm going to reach out to them as my lifeline, a couple of builders that are attendees. One is Nick Jacobs. He's with Diverge Homes, and I know he's active in the market helping him. Nick, can you give me kind of on the Q&A what you're seeing as far as dollars per square foot to rebuild homes?
Well, and that's okay. So that's a great question, and I appreciate you guys tackling it. Another question came through. I was approved for an SBA loan. Can I use it to pay off my ECU mortgage, my elevations mortgage? It's at a lower rate. So are there any constraints around the way you deploy the proceeds from that SBA loan?
I don't think so.
Elizabeth, so
Yeah, I was waiting maybe for Amy or
Hmm.
Bobby to say something, but yeah, the only thing panel help me with this, but they're going to place, the SBA loan is going to place a lien on the property as well, correct?
I would think.
Probably.
Right.
Yeah.
So certainly you could use those proceeds, but you're still going to have a lien that you need to pay off through the SBA loan. So
yeah, that's
absolutely.
likely not an unsecured loan. So in reference to our question, it sounds like you can certainly pay off the loan, but it'll be secured one way or another.
Right. It's not a grant. It's got to be paid back.
What process within Elevation should I be following to consider my options for my current loan and rebuilding a new home? So I know, Todd, you talked to a lot of our members about this, and you have your calculator. So we'll likely advise folks on an individual basis, but how do you suggest the process begin?
Yeah, and we field a lot of calls on this. This is kind of the first level of calls that we get after the fire. You know, I would encourage you to reach out to, you know, our team, commercial lending. But the things we're going to want to know is, you know, how much is your existing mortgage? What's the balance on your existing mortgage? What's the initial insurance payout proceeds? And then do you have kind of an estimate of what it's going to take to rebuild what you're wanting to rebuild? And then with those three figures, we can kind of chart a path of, okay, you know, does it make sense to pay off your mortgage? Should you keep it in place? How much proceeds are you going to have to apply towards the construction loan? And kind of give people a little more guidance as they start talking to builders as well regarding, okay, here's how much money I have basically to utilize for the rebuild.
Amy, I see you shaking your head.
Well, I'm agreeing.
So get involved with your lender, and
Yes.
in our case, get involved with Todd's team, or any of our mortgage loan officers will connect you with the appropriate folks. But back to our previous conversation, want to make sure everything's sequenced appropriately, and once you initiate a construction loan, the draws, and understanding all of that.
And you don't have to be a member. I mean, I encourage people, we take a lot of calls from people that are not members of Elevations, but we do a significant amount of construction lending. So
Yeah.
it's not limited to members. Just give us a call. We can kind of walk through it.
Yeah, and one of the really good benefits of working with a credit union like yours that's very customer centric, I think, is that the fund control and the draws is often for the homeowner's protection, right? It's to make sure that the builder's not getting ahead or not going over budget, or the quality, getting somebody to inspect. I don't know if you guys do that. That's so important. That service is helping the rebuilder do quality control.
It occurs to me on all of this conversation, our homeowners and our affected families, you don't have to fly solo. You got advocates around you. You've got your mortgage company, our builders. Todd keeps a complete list of builders that we have a relationship with. So we would certainly implore you to use the resources available to you, and that's exactly what you're doing this evening. If my HOA has a deficiency assessment and my insurance doesn't fully cover it, is there a kind of loan I could get to cover the rest of it? So this goes specifically to the HOA and a deficiency assessment. Amy or Bobbi?
I got nothing.
Yeah, I mean, so it's very possible that the condominium, that the assessment wouldn't be covered in full, depending on the amount of that assessment. So I think then the question is to you guys, is there a loan that can be, be taken out to cover the difference?
Yeah, that would likely, first option would likely be a home equity product. I'm thinking out loud on this, Todd.
Yeah, my guess is there's probably, it was probably going to have to, if you're in the fire and your house has been demolished or burned down, that there might be a way to roll it into the construction component, depending on the size of the assessment as well. But so there might be a way to roll it in. I want to encourage people that even though they may be feeling underinsured, there's still equity in their property in regards to the land value. Land values in Colorado have increased significantly. So we do feel a lot of calls that people are like, hey, I'm underinsured. I don't know how I'm going to do this. But it's like, well, if you pay off your mortgage, you still got the land, and that's worth significant money. So
that's great, actually, Todd. And what I am gleaning from this is speak with your lender, speak with a potential lender or a construction lender, because that's would likely be optimal to roll that assessment into a mortgage and spread it out. Thank you for that.
I'm sorry, Dennis, I was just going to ask
please,
Bobbi if she has seen, with an HOA, you're going to have unit owners insurance, and then there's the association policy for the exterior. So do we ever see unit owners policies that cover a deficiency assessment?
That's a good question. I don't know. I mean, I know that a lot of policies will exclude or limit coverage for a deductible assessment, but I'm not sure how it would work with a deficiency assessment. And I don't know that it's actually spelled out in the policies.
Okay.
So,
boy, this is fascinating.
Yeah.
I really, I'm learning a lot here, and it's interesting the breadth of our questions. Question specifically for Amy. Amy, is there a precedence for our insurance company to pay ALE for rent on a home I buy as interim housing while my house is being rebuilt?
There definitely is. I wouldn't call it a legal precedent. I would call it a precedent in terms of creative, negotiated solutions that people have been using to contend with the fact that there's a severe housing shortage. There just aren't enough rentals available in the area. And I think For a lot of people, they're looking to do something to get into a comfortable temporary living situation while they figure out what they're going to do, or while the construction on the rebuild is going on. So some people are negotiating with their adjuster to buy a fifth wheel or a tiny home or a mobile, like an deluxe RV.
Right.
The most important thing is to try to reach an agreement with your adjuster, with your insurance company, over what they owe you for the loss of use of your home. And in policy languages differs somewhat. Some policies will talk about the fair market rental value of the home. So, if you can reach that agreement with the insurer, well, if you were to be covering my rent, if I could find a home that was equivalent in size, same number of bedrooms, same basic amenities, it would cost X. So let's assume I'm going to, and let's say you have 24 months max. So you can say, okay, so 24 months times whatever that rental value is agreed to. I have known of many people who've been able to negotiate with their adjuster to say, okay, just give me all that ALE money as an advance, and I will use it to buy a temporary residence. But not all adjusters will agree to it. And Bobbi is probably, might have a different view. I just know that some people have been able to do it, but it's not so much because there's a law that gives you that right. It's more of a matter of negotiation logic, and telling the insurer it's going to cost you the same. So, help me be comfortable for the next 2 years.
Right. Yeah, and Amy's right as far as, there's no law that addresses it whatsoever, and it's going to vary by company. Some companies, adjusters, will not allow you to purchase a property and rent back to yourself. So then you talk about the fair rental value of the home that you lost, and whether they'll pay on a monthly basis, or, as Amy said, maybe a lump sum that you can use however you want. But as Amy said, it's just important to continue to have that dialogue with the adjuster and see if they can if you can come up with some creative solutions.
Perfect. That's an interesting question as well. Okay, so the next question is what I thought was going to be the first question, but this is a little lengthy, so stay with me. With being underinsured, my dwelling coverage paid in full outside of my extended dwelling. My adjuster said this $75,000 bucket of money can only be used and only be paid out when the rebuild is occurring. Is this true? And there's a reference here, reading bulletin number B-5.44. Bobbi might know these by memory from Division of Insurance. It seems there is language to maximize payout on additional coverages without requiring the policyholder to incur the actual cost before reimbursement. Should I request the bucket of money prior to rebuilding? So that's getting a little deep, but
yeah. So Bulletin 5.44 is a kind of a request, some guidance of disclosing, providing what the buckets of money are, being transparent with what's available, but the extended replacement cost coverage, the 20% that's required to be offered in statute, is typically an incurred cost. So if you are choosing to rebuild the home, then some companies will hold that money back until you've incurred that additional money. So, if the incurred cost, if the additional $75,000 comes when you're halfway through the rebuild because you are underinsured, you're going to get it before the rebuild is finished. Once you've provided evidence to the insurance company that you've exceeded the policy amount, the limit that they've provided you already, or the payment that they've provided you. And some companies are just cashing out the policy limits and handing it over to the policyholder. So that really does vary by company, but technically that extended replacement cost is an incurred cost.
I'm glad you knew the answer to that. So we're going to end up going into a lightning round here. There's a significant number of Q&A, and I want to respect everybody's time. My insurance company has a two-step process for coverage. A-dwelling. They offered half of our limits up front, but to get the remaining amount of our limits, I need to get a cost estimate from a builder to rebuild our home. So that two-step process sounds like the last half of it hinges on the cost estimate. Is there any way to avoid getting a cost estimate? Builders are so slammed with business designing and rebuilding homes, and there is a cost to me to get the estimate. So I want to make sure I stated that accurately. So the two-step process, half up front and then half when we get the estimate. Is that standard operating procedure, I guess, is the question, or can this homeowner defer the cost estimate or not get a cost estimate at this time, I think is what I'm hearing.
You know, it sounds a little like this question touches on the last question in a way, right? That typically, in order to get the full amount of your dwelling benefits plus any extended coverages that you have, you typically do have to reach an agreement with the insurance company over what the reasonable cost of replacing the home that was there as was. And then that agreement, so the agreement can be based either on an exactimate estimate, which is how the insurers, as we were talking about earlier, they typically will do that. They'll just put all this, the adjuster will put all this information about your home, hopefully accurately and in great detail, into this computer program, and then it'll spit out an estimate, and that's often the basis for what they will offer you, but they won't pay all that at once. They will parse it as you spend it, right? Which is what Peg was just saying. Bobbi was just saying, that the contract is they get to parse it, but in real life, because so many people are underinsured, we are seeing insurers just max out, cut a check for the whole thing without making the policyholders show them progress on the construction. That said, if you don't like the exactimate estimate, or that's not how your adjuster is doing it, I mean, it is their job, right? To that's what adjusting is. They're supposed to calculate your loss, and you just want to get a second opinion. It is, I mean, from the beginning, we reached out to the Builders Association in your area to see if they would be offering that service. It's always hard for people to find a builder who's willing to price a project they're not going to get hired to do. But I know that the Grand County Builders Association has like a list of like 6 or so estimators. So I know it's painful to have to pay somebody for that. Usually you only have to do that if you don't agree with the estimate the insurance adjuster has put together. So the bottom line is, I mean, in my view, the adjuster has an obligation to do a complete, accurate estimate. So I don't know if Bobbi sees it differently.
No, I agree.
Understood. Very good. That's great. Thank you for that, Amy. Nick Jacobs is weighing back in, Todd, in reference to your question earlier. It's definitely an area of confusion for affected homeowners. Our general communication to homeowners has been a cost range of $260 to $295 per square foot based on our cost from the last 20 or so elevations loans. We define square footage as the entire livable area, including basement. When people ask for the cost of an unfinished basement, we generally deduct $45,000 to $55,000. Today's engineering requirements almost always require a foundation that is almost equal to the depth of a full basement. So, Todd, that's kind of Nick, thank you for that, and kind of gives us some insights in the pricing and things of that nature. Thank you, Nick. This may vary by homeowner, but does it make more sense to sell the lot/land or invest to rebuild and then possibly resell? Boy, what say you, Todd?
That's an interesting question. And ironically, I have a couple people that we're working with now that mathematically, and correct me if I'm wrong, as I understand the insurance, is you're going to get so much depreciated value up front, but there'll be a second check that comes in once you complete the rebuild. So a lot of people are electing to proceed with rebuilding, and they're going to sell it when it's done, just to maximize the insurance proceeds, even though they have no intent of living there or anything. So at this stage, kind of depending on the numbers, I think it makes more sense to rebuild. But I have seen several lots in the burn area that have gone up for sale. So I think it's pretty individualized depending on the value of your lot, your insurance and stuff like that. But Bobbi and Amy, you can correct me if I'm wrong, but I think there is a second check that usually comes when the rebuild's finalized.
Yep.
It breaks my heart to hear questions such. Those are very, very difficult questions, especially for folks that have put their heart and soul into their home, and there's a option to walk away. I just our heart bleeds for all of our affected families. So Nick, just a couple more things here, and we are at time. So let me Nick weighed in with a couple other comments. In Colorado, including a finished basement for your new home is a single-digit percentage increase to the overall construction cost. Therefore, it is highly recommended to finish it out during initial construction. Doing so delivers a livable space, a livable square footage area that is equal to the first floor for a fraction of the average overall cost. Nick, that's great. That's a very that's a good perspective. Nick goes on to say a $50,000 basement finish equals to about 7% of the overall construction cost, but typically increases living area by 30% or more. So Nick, thank you again for your insights. It certainly would lead me to believe that take time to consider a finished basement as you rebuild. Well, very good. A special thanks to our attendees. We're with you. Let us know how we can support you. We appreciate you coming in with such thoughtful questions and very important questions. We'll continue our town hall series as we deem pertinent. Again, as I said at the onset, we want to make sure we have topical subjects that will help you on your path to rebuilding and your decision process. Amy, thank you so much. It's been a thrill to get to know your organization. And by the way, United Policyholders provided us with a number of resources, including links that we'll put up on our Marshall Fire resource page on our website at elevationcu.com. So Amy, thanks for those links. And importantly, thank you for your leadership and fostering these processes along. Bobbi, the agency, invaluable to our homeowners, to our state. Nobody would have ever thought in a million years that we'd have a situation like this in an urban environment. Division of Insurance is a huge resource for our consumers, and we really thank you for all that you do. So thank you for that. And always, Todd and Elizabeth, you are the experts in the room when it comes to some of these really, Todd, you're smiling, but you and Elizabeth have done so much heavy lifting with our membership and the community. So I would encourage, pardon me, I would encourage our attendees to reach out to these two as a resource. So on that note, I will again thank the panel overall. We appreciate you being here tonight. And thank you to our attendees. We did get through our questions. So that's great. I was just going to say that if we did have outstanding questions, we would respond to our attendees on email. So on behalf of the credit union and the foundation, we thank you for tuning in this evening. Good night.
Thank you.
Thank you.